Welcome back to Global Lens Macro to Micro. Today is a bit of a special one since I'm joined by a very dear friend of mine. I think we've known each other for approaching 40 years now, namely Emmanuel Goldstein. Emmanuel is not only a very close friend, he's also an accomplished investment banker. Emmanuel, you head Morgan Stanley in France, and also you are a lecturer at Sciences Po. We have the pleasure of lecturing together finance to master student at Sciences Po. So Emmanuel, many thanks for making the time and welcome.
Many thanks for having me.
I felt there were probably too many topics we could pick, you and I, not only because we know each other well, but also because we have so many things in common. So it was hard to decide which ones I would focus on, and we're trying to keep those videos short and sweet and impactful. So I'm going to limit ourselves to two today. The first one being investment banking, and I want to talk about investment banking because you spent decades in the industry. I used to be an investment banker myself back in the days, and I feel it's an industry that still attracts a lot of interest, a lot of potential people who want to work for it, but also that is getting probably massively disrupted by AI. So we'll talk about that. But let's first talk about the basics of investment banking and how would you define, the skills that are required to be successful in investment banking today?
So I think clearly you need to want to have an impact to become an investment banker. This is not a job for people that just want to fly by and look at things from further away. It's quite technical, it's quite precise. We are dealing with topics that are what we call C-suite level, all right? CEO, CFO, CTOs, CIOs, etc. And these people are at the top of their career. They are reporting into the board, which is a board is usually made of people that are of a very high level, and we need to be the advisors of the C-suite of the board, and therefore we need to produce ideas and documents that are at the absolute top level. There is no room for errors, uh, and therefore it requires really some interest in into wanting to have an impact at that sort of level. The ambition of actually speaking with people that are on top of the game, although at the beginning of your career you're in your 20s, mid-career you're in your 30s, and then you are actually becoming a managing director if you manage to go all the way, late 30s, early 40s, and then you have 10, 15, 20, 25 years ahead of you. And so you really need to want to have an impact on the business world and on people that are really driving the business, whether they are entrepreneurs or whether they are at the top of the largest corporates in the world.
You talked about impact. You also talked about, the notion of advisor. And I've always felt there was a big question to ask oneself when you want to embrace a career, which is whether you want to be an advisor or a principal. And you can pretty much divide most jobs in finance between either being advisor or principal. Would you agree that this is one key question to ask yourself if you want to embrace investment banking career?
Yes, absolutely. And let me give you the pluses of being an advisor. You are in touch with many, many situations, right? Because you are advising many people on many different things at the same time. Whereas in my mind, if you are a principal, in particular in private equity, you will be living with some situations. You make an investment, you have to live with it, right? And that is great because you have a much deeper impact on the assets. But as an advisor, you're touching many more things, i.e., you're gaining much more experience from a certain perspective on many, many things. So if you like diversity, if you like to change things to cover, say, 150 situations at the same time, not simultaneously, but have actually access to these 150 situations. And this is, of course, just an illustrative number. Uh, but if you want to jump from one thing to the other and always be very relevant on every topic, advisory could very well be for you. And I would say that at the beginning of your career, when you see people coming out of the same school than you yourselves, etc., and you look at your peers 5 years afterwards, you will see that the ones that have embraced investment banking have acquired such a wealth of experience within, say, 3 to 5, 6 years of their initial career. They have had access to very, very senior topics, have covered a lot of ground because they have been exposed to many things, to many situations during these couple of years. And hence, the learning experience is absolutely tremendous. And this is actually what keeps one alive as well in the career. Is actually, after 25 years at Morgan Stanley, I'm still learning every single day certain things, whether it's about businesses, whether it's about people, whether it's about power struggles within corporates or government decision making. Every day is something new is arising. And so there is never a boring moment, as we say in investment banking.
I can echo that because I was always amused by those young investment bankers who were joining private equity, um, and were absolutely shocked when I was telling them, if you're lucky, you're going to do one deal every 2 years, when they were used to, doing many deals every year, and for the most successful ones, that's, I mean, more than 10. And they were always, in a bit of a shock, in a bit of a transition indeed, because as you rightly say, the cycles are much different. It's longer cycles. You're going to go deep on a topic, but as a consequence, you're going to have less of this renewal of experience and adrenaline rush. It's very true. You talked about what keeps you alive. You're still learning. Can you elaborate on that? Why is it something that you know, someone can embrace for the long run? Because wrongly, investment banking is often seen as a path to something else. I mean, there's a good proportion of bankers who are going to do exactly that, but there's also a lot of them who are going to have a career in investment banking. So can you talk about a bit more about, how this evolved with time, why this is still interesting when you reach a senior position like yours?
Sure, it's a very good question, and I've always tried to find the right allegory that is makes it easy to understand what this job is actually about. And you remember that when you were an investment banker and I was looking at joining the industry, you were explaining me for 6 months what it was about, and while I could grasp some things, I could not grasp the entire thing. So the best allegory for me, I think, is that we are doctors, journalists. We are actually seeing uh, CEOs, board members, CFOs that have decisions to make. Sometimes they are sick, the company is sick and needs like really heavy surgery or just additional examinations to establish what could be wrong, which could be market sounding, various things of that sort. Sometimes they are not sick at all, but they still want you to feed their thoughts, etc. And you still want to see them, although they are very fit, etc. But you want to be in preventive medicine, so to avoid that they become sick, etc. And so, as for doctors, initially you have a lot of things to learn. That are very technical. You will learn about the medications, you will learn about the analyzers, etc. But only the experience actually makes you a very good doctor, because you will see a lot of patients, a lot of situations that will actually lead you to be a great doctor, a great investment banker. And that is why you keep learning, because no situation is alike. Techniques are evolving, and this is exactly as medicine, right? You should always be aware of what's going on, what are the new inventions or the new discoveries, etc. The new analyzers coming out, the landscape is moving. And on the other hand, your experience with the people, whether it's internally or externally with the clients, are evolving as well. Let's look at internally. It's true that the way juniors, so the non-officers, have expectations today is very different from what it was 10 years ago or from what it was 20 years ago. This has all evolved. So if your management skills dealing with people with talent have stayed the same as say 20 years ago, then you're going to totally miss out on managing properly the internal things and the talent development and having your more junior colleagues being prepped up to become more senior progressively. And on the external side as well, you have to draw various key lessons learned for all the situations that are arising, because things are just different. And the CEOs, board members I was referring to, chairmen of the board, etc., they want to make sure that they have the advice of the best investment bankers. And there is no lack of talent in the industry. So either you're at the top of your game and you can bank people that are on the top of their game, or you become irrelevant and then you progressively disappear. And that is really the draw into investment banking, as you have to stay super sharp, because your younger colleagues are super smart, you're very stimulated, there is no room for just do it because you have to do it because it's like that, because we always did it like that. That is not how we manage things at Morgan Stanley. On the contrary, you lead people to talk to you, to challenge you, so that you are actually a better person explaining why we're doing things, or on the contrary, are revisiting whether we should not take on board a new idea that is being brought by this or that team member. Team is, by the way, a very important concept here, because you shouldn't be a hero. You cannot do things on your own. You only do them within a team, and you can lead the team. You can be at various levels of the team, but at the end of the day, every contribution of every team member is very, very critical for the end results. And that's how it should be.
I think you do a better job at explaining the investment banker uh, job than I did with you when you start your career. I like the doctor analogy. I think it's a pretty powerful one. And I agree with you that people tend to underestimate. Yes, it's technical, but it's also a very, you are a generalist at the end of the day, and you accumulate experience. And I like to say investment banking, just like private equity, for that matter, is really an apprenticeship. And you get better with experience, you get better with tough experiences, and with the passing of time. Now, this is an apprenticeship, but it's also being sort of disrupted by AI in a way. And I'd be curious, and I'm sure a lot of people are asking themselves the question, how this industry is gonna be impacted. How is it gonna evolve? There will surely be some space left for investment bankers, even when AI is fully adapted. But conversely, AI is probably the biggest industrial revolution we've seen in recent history, because it's really touching every aspect of the economy. It's really touching, not only blue collars, but also all the white collars. So how do you approach that? How does it impact already today the job of a young investment banker, of an analyst, of an associate, and where do you see this going? What's going to be, the future of investment banking, say in 5 to 10 years?
So I would not say that AI is going to be disruptive. I think it's a step change in the work, but we have known some step changes in the past. Uh, when I started, I had a Palm Pilot, and nobody knows what a Palm Pilot is. This was an electronic shuttle that would synchronize when it was put on a socket next to your PC. And we were writing emails that were actually written memos sent in electronic form, very long, etc. The mobile phones were not as developed as they were to become, and therefore we were writing these longer emails, which were basically memos. When the BlackBerry came about, and suddenly this became about you have your email in your pockets, emails tended to shrink and become very quick ping pong emails, where actually it was generating its own flows, etc. This was a huge step change. But when we had that, I was told by some colleagues that were more senior than me that 5, 10 years before, the mobile phone itself wasn't even common. And therefore, there were senior bankers that were, say, in Paris and were going to phone booth with bags of pennies or of various coins to actually be able to place phones to the UK, to the base, and to debrief their junior team, ask for follow-ups, etc. They were putting these coins into the phone booth, etc. Right? It's like you look at these movies that were made in the 80s and you have people leaving messages on answering machines. And it's very difficult to understand for a newer generation. It feels, but you want to reach someone, you have that person's number, and eventually you do a voicemail, or you write to them on Insta or something, right? It's sort of inconceivable, etc. But getting back to AI, it's absolutely a step change. But what it's going to take off the table are some of the more mundane tasks that some juniors have to do currently in investment banking. And progressively, we are taking these out so that the juniors can focus on the real things, on where they have value added. I would say that senior bankers don't necessarily need to have juniors produce what we call public information books, PIBs, right, which is a very big concept in the industry. Brief me on this. Get me this book of 150 pages with credit reports, with the recent equity research and the various annual reports of the company, etc. With AI, that's a press of the button of the senior that is properly trained. And properly trained is 10 minutes training. I'm not talking about days and days of offsite training or anything like that, right? So instead of having a senior send something to a less senior person that will then ask a more junior person to do a public information book, and then reviewing the public information book content, and then moving extra step backs, and this all takes 48 hours at best. This is now the press of the button of the senior, and there is no need to expose juniors to that sort of thing. And so bringing together analyst research reports and having the view of the consensus, etc. This is actually a lengthy program uh, workflow where you actually take the broker reports, put them on a table, put the table into our PowerPoint on the slide, etc. That will be automated in a matter of months, right? And it has taken a little bit of time because we are a regulated industry and want to make sure that we preserve the secrecy of what we're working on. We don't want to have a common data center, right, that would be shared with people from the outside. We are regulated and we need to ensure secrecy of what we're doing. So it takes a little bit more time, but this is just a question of implementation. And therefore, the work of juniors is actually going to be much more interesting than used to be. And of course, there will be a lot of room remaining for the investment bankers, because most of what we do is actually not mechanical. The mechanics of it is an input. It's just the start of the way we think through, right? Finance and valuation is not a science. It's actually an art. You discuss valuations. You have various views. If everybody agreed on a valuation, there would be no stock exchange. You wouldn't need it, right? You would have one opinion. This is this is the value of this stock today, and that's it. This is a scientific method, etc. But it doesn't exist. And so actually what's happening is that we have the debate going on the stock exchange. There are people that want to sell at a certain value and some people that are ready to buy at that value, otherwise there would be no transaction. And that is exactly the debate, the art we have around valuation. That is a projection of the future cash flows, among other things. There are other methods, but that is one of the key methods. And that is actually there to stay because that requires a lot of judgment. And it's not purely mechanical, far from it.
It's fascinating because I probably agree with most of the things you said, but I'm I'm still I'm still disagreeing on how disruptive it's going to be. Reason being that, and I'm going to sound like a tech bro, but this is yes, you're right. All of the mundane thing is already replaced. By the way, I mean, I'm amazed. I when I have a meeting, when I have a board or whatever, now I'm doing most of my briefs thanks to AI, because the moment you know how to use it and you have the basic file and you can point it to the right sources, it's actually doing an even better job than an intern or an analyst. And that baffles me, because not only it's a better job, it's more precise, but it's also more tailored to your needs, because it's really understanding really well what you're looking for. But where I disagree with you is, yes, you're right. This is not mechanical. Absolutely, this involves judgment. As we said, it's apprenticeship. And I'm going to use again the analogy you used with doctors. And you look at medicine today. Medicine is at the risk of being massively displaced because already AI is doing a better job at certain prognosis, certain analysis. And why is that so? It's because AI, unlike the traditional computer intelligence, if you wish, is really mimicking human brains, and therefore if we define human brains as the ability to combine thoughts based on a certain experience and certain ways of thinking, there's no reason why AI couldn't be one day a very good advisor for a particular situation. So I really think that it can go much deeper than what we're seeing today. Uh, Again, I still think there will be space for humans, but more on the metacognition aspect of it, um, which and metacognition being defined as, the not so much the analysis of existing data, but the ability to question, formulate assumption, thinking outside of the existing set of data, things like that. So, um, and this is the topic I wanted to finish the discussion with, which is, put yourself in the shoes of the students we have. We lecturing together at Sciences Po. Any aspiring student who's wondering, asking themselves a few questions. One, what are the skills I need? In particular, what sort of financial literacy do I need to reach? How do I get ready for this revolution? So let's try and cover these quickly. So first question, what advice would you give to a student who's considering finance as a potential job? What are the traditional misconceptions and or the question they should ask themselves beyond investment banking, of course, in finance in general?
It's a very good question, and as you know, I've been through the things 25,
I
26
know.
years ago, and I was typically not very good at math, and I had the misconception that finance was for math buffs, and that was it. And yes, people that are good at math can be very good at finance, but it's not an equal relationship necessarily. It's not a given. And people that are not great at math, like me, can be very good at finance. And so there shouldn't be any preconception that it's not for you. And I would say some people exclude themselves wrongly, and they shouldn't. It has been the case for women at some point that felt okay. This is a very masculine world, etc. Not so. It's not true. There are women that are extremely successful in finance, and it's not a masculine way. It's not a masculine world. Sorry, don't expect any banter or things of that sort that would put anybody at not at ease, etc. This is actually a very civilized, courteous work environment that's very open, and where somebody that would like to have an impact, be in a very meritocratic system, can really find a way to be extremely successful. And there are rewards. Some of them are financial. That usually in finance, people are quite well paid compared with other industries. But as well, there is really intellectual reward, right? And I can't insist enough on that. The fact that me at my age, say being mid 50s, mid to late 50s, I'm working with people that are mostly in their 20s and 30s, and some in their 40s. It keeps me very much young. right? It's a way to really, I need to stay sharp. Otherwise, I will be replaced by the people I'm preparing to be my, following into my steps. And it keeps me super sharp, actually, because I'm stimulated constantly. And this is really something that is great. So no preconceptions feeling this is not for me. I will never find a space because this is for this or that category. I was not so great at school and therefore is not going to be for me. You need to be hungry, right? If you are just fly by feeling, oh, well, I'm going to try this and then I'm going to try something else, etc., that's not going to work in finance because a lot of people that are motivated and they manage to get in, and just to get in, actually, you need to have a very, very strong motivation. And I would say that if the motivation is not there, people will feel it almost instantly. Usually, they figure it out in the interviews if you get to that stage, and then you don't get through. But even if you manage to sort of put the facade on and get through, etc., on the job, it will show very, very quickly whether you're super motivated or not super motivated. And then, as you laid out, Jean-Baptiste, there are multiple uh, aspects in the finance industry, between being an analyst research and equity and sort of being the bellwether of the industry, saying which companies are great, which are not so great, etc., and deciding what the price is, etc., or being a private banker. And these are not opposite sides of the spectrum. They're just diverse positions in this industry. A private banker will have private conversations with his clients that are extremely demanding because they have accumulated some serious wealth and they want to have a sparring partner to actually feed their thoughts. They're not waiting for the private banker to tell them there is only one way to go, it's this or that, etc. They are expecting to have somebody that is super smart, feeding their thoughts, and presenting good ideas. Maybe educating them on some things that they don't know. That's all great and good. And so the qualities of a private banker are obviously not the same qualities as a research analyst, and are not the same qualities as an investment banker. It remains that you need to be precise, to show attention to details, etc. But they are not the same. And let me make another maybe difference between various characters. There are some people that are very good at talking, very good at selling things, selling ideas. And a lot of that is actually what we do. It's convincing a client to hire us, investment bankers, to do certain things. And so some people that are not that are a bit on the shyer side may feel, whoa, this is only a world, finance is only a world for people that are good at talking, at pitching, as we call it. But not at all. There are some people that are extremely analytical, that are working in hedge funds, and the only ideas they need to pitch are to their bosses, right, and to the heads of tradings and to the boss of the hedge fund, etc. They don't need to be that great at selling it outside to some clients that can say yes or no. They need just to lay out their thought process to convince that actually this is a good idea, but it will be relatively factual, etc. And so somebody that is extremely analytical and that could have more difficulties expressing these ideas and being in pitch mode could be thriving in some of these environments. So there are really some openings for everyone, frankly.
That's great. Final question, and we could go on for much longer, but we need to wrap this one up. Final question for those that don't want to work in finance. Um, can you explain? You and I are passionate about financial education and how anyone should get a proper financial education. We're doing that with our students. We're doing that with our kids. Um, can you elaborate a bit more about this topic? Why, even for someone who's going to work in a completely different field, why a minimum of financial literacy in today's world is essential?
Yes, totally. And I'm going to use here as well an illustration to make it somewhat palatable. and to show that actually financial skills can really be applied in everyday life to make some of the most important decisions that one has to do in a life. For example, whether you should own or rent your residence, your main residence. Uh, I was always convinced that it was better to buy your flat, right? This was an objective in life. It's, climbing on the property ladder and all these good things. And so you have to do it as fast as possible, as early as possible, and then you grow your flat, etc. As you move on and marry, have kids, or etc. etc. Um, and that is sort of an irrational way of looking at things. There is a financial way of looking at things, which is the cost of opportunity. I'm buying a flat, so I'm putting money into the flat. And so I'm not putting that money to work elsewhere, and it's not generating revenues. And here I'm talking about my residence, right? I'm not talking about buy to rent. So I'm buying my main residence. I'm blocking this money, and therefore it's not producing anything on, say, the stock exchange or interesting products, solutions that could produce high interest rates, etc. And I'm not saying that this is the only way to look at things and that therefore you should not buy your residence. I'm just saying that this is an interesting way of looking at things that should feed your thoughts actually at that moment in time. And yes, some people will always want to own the place where they live because they see it as forced savings, and they will see it as somewhere where they may retire. But who is going to retire in the first flat that the person has bought, right? Very rarely so. So it's usually distinct. So the financial perspective can bring a perspective whereby suddenly you realize what are the real ways of looking at things. And you may still decide to buy a flat, but you may as well feel that if the flat is going to increase in value, say by 3% a year, and there are lots of costs on top of it because the apartment building needs to be renovated regularly because the taxation may be higher when you own instead of renting, etc. You may be able to generate much more money that is more liquid by going to invest this money onto the markets, actually, and create much more wealth than just buying your flat. So, and maybe you are attached again to it for sentimental reasons, but let's try to be rational about it and have at least a rational input into that decision making.
That's a great one, and the reality indeed is if you look at it in a purely financial way, um, and you have the ability to invest money, and you factoring in the notion of liquidity or liquidity, 90% of the time it's better to rent than to own. But as you said, there's other consideration. Thanks a lot, Emmanuel. That was a fascinating talk. Thank you for your insights, and we'll wrap this one up. But I'm sure there will be a few more in the future. Thanks again.
Thank you for your invitation, JV. Always a pleasure.